Welcome, ladies and gentlemen, to Edelmetallmesse Munich, day 2. It's Saturday, and Commodity TV here for you. We want to talk now to Scott Melbye, the Executive Vice President of Uranium Energy Corporation. Yeah, America's, I would say, very soon largest uranium producer.
Absolutely, yeah. It's a great pleasure to be here talking about uranium and nuclear power in Germany. So thank you for having me on.
Yeah, thanks for taking the time. We were already talking about uranium markets, but now we want to talk especially about Uranium Energy Corporation. Yeah. I'm a shareholder of the company. I have to disclose that also. One of my biggest positions now I have ever held in your company, because I'm totally convinced on what you and Amir are doing on the one hand, but on the other hand I'm convinced on uranium markets. You've done a lot of deals this year. Yeah. Jesus Christ. You bought physical uranium. The last deal was, I think, that you bought the Rough Rider project. Yep. So elaborate a bit on that. I mean, it looks like Christmas and fall shopping and spring shopping together. It's crazy what you are doing.
Yeah, no, I mean, I really credit Amir and his vision to really, and the whole team at UEC to really be building a global leading uranium mining company, not just a small junior American company, but a company that really can really be a major player in capital markets, in uranium markets, and the last year was really exciting. We have invested in 3 transactions over $500 million to grow our uranium capabilities. The first acquisition was done at the end of 2021, where we acquired the U.S. assets of Uranium One. This was the famous Russian buyout of the uranium resources in the state of Wyoming, which was very controversial and a headline story in the news back in the United States. But we were very pleased to bring that back into American hands. But for UEC, it couldn't have been a more accretive, important transaction for us, because you all know, if you're familiar with our company, we've had the production platform hub and spoke in South Texas, anchored by the Hobson processing plant and projects like Burke Hollow, the largest new ISR well field being constructed in the U.S. But now with the Uranium One acquisition, we now have a second production platform, a second hub and spoke in the Powder River Basin of Wyoming, anchored by the Irigaray processing plant, 2.5 million pounds per year capacity, and 7 satellite operations within 100 miles of that plant, 5 of which are fully permitted and licensed, including the Christensen Ranch well fields, which can be turned on quite quickly, and we're taking all the steps necessary to prepare that for restart. We just want to see the uranium price increase a little bit more from the $50 level, but clearly we're covering our costs at this point, but we want to bring that into production when we can make larger margins than right now. But then we followed up that acquisition with UEX, which is a explorer of projects in the Athabasca Basin and Nunavut in Canada. 29 projects, 5 of which are advanced development, and some of small sort of minority interests in some pretty incredible projects like Millennium with Cameco, Wheeler River with Denison, joint venture partners with Orano as well. So we're really well positioned now in the basin, in addition to the 100% owned Christie Ranch and Christie Lake projects that have been seen drilling results in the last few months, turning up 65% ore grades in some of the drill results. So that was kind of the first step into the basin in a big way. But we also then followed that up more recently, just in the last couple of weeks, with the acquisition of Rough Rider. This was a $150 million acquisition of a project that has 60 million pounds at a 5% average ore grade. It was the subject of a huge bidding war between Cameco and Rio Tinto. Rio Tinto acquiring it back in the day at $650 million, and since has put a lot of work into the project and kind of scoping out what the mine plan would look like when it is brought into development. So now we have a critical mass of pipeline projects in the best region in the world, which is Saskatchewan, Athabasca Basin, and that's complemented by our near-term production platforms in Texas and Wyoming. Those will be our first movers to bring back into production, but the Canadian pipeline really presents a longer-term vision for the company.
Okay, I hear all the time going soon in production. Could be expected next year?
We could. We've not announced a firm startup we haven't made an announcement that we'll start producing by such and such date at such and such rate. But I can tell you in Texas and Wyoming, we're taking all the steps necessary to restart. So hiring people, acquiring plants and equipment. In Texas, we've completed 105 monitor wells and tested and sampled all of them as the baseline for new production in that first production area 1 well field at Christensen Ranch. I think the initial production in Wyoming could be quite quickly. We could essentially restart tomorrow. But the real decision for us is once we start production, we want to sustain it. And in ISR mining, that means once we're in production, we have to continue drilling, completing well fields, constructing header houses to maintain. We don't want to go into production to come back down. So we want to make sure all that's in place. There are some longer lead time items that the supply chain is very real. Something that we could have ordered on a 6-week notice years ago is now 6 months or 9 months. So we're making sure that if there's some of those things are needed to be ordered, that we place those orders early so we're not held up. Mm-hmm. But our indication is that at a $60 market or better, we feel comfortable producing from both platforms simultaneously. Yeah. I think we're going to get there quite quickly with the way the supply squeeze is developing for 24, 25, 26. I think the spot market has really been drained of a lot, if not most, of the excess supplies because of production discipline, because of speculative interest. So we're in an exciting time for UEC where all of our discipline, all of our planning during the downturn is really going to come to fruition. And I've always said great mining companies are defined by what they do in the difficult times to prepare for the upcycle. It's not what they do at the top of the cycle, it's what they do at the bottom. So we're very much ready to now capitalize on all the steps we've taken.
Absolutely. I think the US also needs that. I mean, if I read the press, the government is investing in a strategic reserve.
Yep.
I think 1.5 billion. That was the first thing or the first move I saw. Yep. And if I look today, I think the US imports 99% of the uranium. So you must be in the future, when you start, let's say you start with production 2 million pounds. Yep. Maybe you can bring it up to 4. Yep. Yeah? You must be a partner of absolutely preferred choice. Yeah, I could imagine for the government, defense, but also for utilities, because that's US uranium for US power production, right?
Yeah. Yeah, we've had very productive discussions with utilities. Obviously, we're engaged with the government on the Strategic Uranium Reserve. And it really comes down to that energy security, energy independence. The U.S., like Germany, was too reliant on Russia for energy. In our case, it was 60% of our uranium supplies for 20% of our electricity in the United States was coming from Russia, Kazakhstan, and Uzbekistan. Obviously, I never thought was a good idea before, but now after the invasion of Ukraine, clearly something that the U.S. needs to move away from. So producers like UEC in stable jurisdictions couldn't be more stable than Texas, Wyoming, and Saskatchewan. Pro-resource, pro-development, pro-mining, with great geology and history of uranium production. We feel that we're very well positioned. And you're right, I think the Western markets in Western Europe, the United States, Canada, elsewhere, I think are really looking to Western stable suppliers. And I think the days of Russian supplies and Russian nuclear fuel imports are numbered. There are a number of efforts in the United States Congress to ban Russian uranium imports, some more immediate, some more gradual, but I think the consensus is we need to stop that reliance. It's just a matter of how quickly.
Mm-hmm. Okay, so how would you rate your first, or let's say initial life of mine production, now also if the new purchase, the Uranium One? Let's concentrate for a second onto the US, because those are the two projects or the two plants which can go very, very fast in production. How do you see that under the light of the resources you have so far, and maybe future exploration possibilities? Could we say you can easily produce the next 10, 20 years?
Oh, easily, beyond. I mean, this $500 million investment in Uranium One, UEX, and Rough Rider have tripled our in-ground resources to 300 million pounds. It's doubled our productive capacity. It's doubled our licensed well fields. So not only do we have near-term production that can be brought on in months, not years, it also, we can sustain production for many, many years into the future, and we can increase. If the uranium price increases faster than, and I think is a high likelihood, faster than many expect right now, we're looking to expand the Hobson processing plant capacity from 2 million to 4 million. We have the license application has been in, and we expect news on that fairly shortly. Irigaray is 2.5 million pounds. So as it stands now, we have 4.5 million pounds of processing capacity. We have well field capacity of 6.5 million. So that should be the visibility, in the near to medium term. Obviously, first production is going to be in the 1 million to 2 million pound a year range while we ramp up. But I think if things unfold the way we think, we move to the 6.5 million, and then at some point we look at, can we produce more? Does the market need more production than that? I think it will, but first things first is getting Christensen Ranch and Burke Hollow into production.
Okay, super. As I remember in the past, because you have been in production already, I think when I was talking also to Amir, we were talking about a range of $28, maybe $30 AISC per pound uranium. Would you say that is still a number which could happen? I know it's too early to say until you are really in the commercial production, but could we say, let's say, in the $30 to $35 range is maybe makeable?
That was accurate.
Yeah.
When we were in production, which we shut in 2014, but we have to be realistic about inflationary impacts. Fortunately, a lot of our plant and equipment is pre-inflationary dollars, but there is obviously the impact of everything being more expensive. So our just rough rule of thumb is I think uranium production for us in Texas can come in under $40 all in cost, and in Wyoming probably all in under 45. Very rough numbers on that, but that puts us in the first or second quartile globally of production cost and is very competitive. So hence you can see why we want to see uranium prices are 50 today. That's great. We could cover our costs, but we're not in the business to just cover our costs. It's to make a profit.
I just wanted to say that.
So, and we have flexibility. We haven't committed. We're an unhedged seller, meaning we're not being forced by contracts to go into production ahead of our will. It'll be our decision when we feel the market's right. We'll sell into the prevailing spot market or into relationship deals on a very short-term basis with other entities. But the objective here is not to hedge the utilities' upside exposure. That's their job. Our job to the investor, to the shareholder, is to sell uranium for the highest price possible.
Yeah,
and so
glad to hear that.
our unhedged approach really has that in mind. So we think, given the supply real shock and squeeze that we see in the coming 3, 4, 5 years, our production will be coming on at a time when it's really needed, and I think prices will be quite supportive and will be a real pleasant return to the shareholder who's been very patient.
Yeah, absolutely. As we are both uranium bulls, you told me earlier $100 uranium price, personally, that's your personal opinion, we have to say that, is in the reach within the next years. I see it the same way. And I heard already people saying, $200 in 5 years is possible.
Yeah.
Absolutely, we don't know what is 5 years from here. But what I do not really get is the market today. We went to 53. Friday we were already 49.70, I think. What is moving the market again back below the 50? Because we all know we are in a bad supply position, and demand is rising for sure. Because that many new power plants will be built, SMRs will be built. That is all on the plate already, and they will not diminish. So what drives the market today? It's small orders. Is it a shaky market?
It's very, very small quantities. Like the pressure on the price on Thursday and Friday of last week was really just 300,000 pounds. Seller needing to move that and obviously push the price down to that level. But uranium is not the most efficient market. It's not like gold or copper where we have huge liquidity, huge volumes. And so you're going to have times where a small amount of supply can impact the price like it did, knock it down a couple dollars a pound. But an inefficient market works both ways. And we've been in, over a decade-long bear market where we've been in oversupply, and that inefficiency has caused lower prices and sustained lower prices. As we go forward into an undersupplied market, just a little bit of demand works the other way.
Yeah.
And I think a lot of production is being placed now under contract, so less and less production is available to the spot market. We're hearing that traders are having a harder time sourcing material to do the forward carry trades. We're hearing utilities seeing very tightening of available supplies in 2024 on. So I wouldn't worry about the micro movements in the spot price. The macro trend, the long wave trend of uranium prices is higher. I think what will really happen is if you have prices lingering in these $49 levels, you'll have a lot of speculative interest come in and buy that up, because we don't think it would be a bad trade to buy uranium at these levels and carry it forward. And UEC we've contracted for over 5.5 million pounds of uranium in the last year at an average price under $40 a pound. So, when you can buy uranium at or below the global production cost, you back up a truck and you buy all you can. And we did, and we were quite happy. It's provided a nice balance sheet item for us, a liquid asset. We have made some sales. We reported in the last reporting period, we sold 500,000 pounds at about a $46 average selling price. We will, when we need to sell material to generate cash, we'll do it quite cleverly. We'll do it in a way that doesn't impact the market negatively. But it also is a complement to our production. When we're in production, we can complement purchased pounds with produced pounds.
Yeah.
And we're quite optimistic of that. Physical program's been quite successful.
Loved it. So I would say you are absolutely in good shape, great shape. You have the future also organized this year for the next 30 years, I would call it, 40 years maybe. Yeah. We will be both already pensioneered when that all happens. But also you are fully organized to maybe restart then next year production. How long would be the ramp up to a full commercial production, let's say to 4 million, or maybe then 6.5 million pounds?
Yeah, this is the beauty of ISR production, because when you embark on an underground mine or open pit mine, conventional mine plan, it's quite defined how the mine evolves and ramps up. But with ISR, if we see prices increasing faster than expectation, we put additional drillers and well field developers in the field to expand production faster. If things are kind of idling, we can keep it lower level, and if we're completely wrong and prices drop, we can throttle back. You can't do that with a $1.5 billion underground mine. But with ISR, I don't want to say it's load following, but it has much more flexibility as the production levels. But a typical ramp up in ISR well fields, you'd probably be ramping up to 1 million pounds in Texas, 1 million pounds in Wyoming, increasing towards the licensed capacity. But over time, you can reach the 4 million, 6.5 million pound capacity with, I think we've run the numbers probably with an investment of under $80 million CapEx. We can move towards those full production levels. That's nothing.
Yeah. And that's like
there's
2 years,
$1 billion
or
CapEx requirements for conventional mines.
Absolutely.
So, but we'll do it very judiciously, cautiously. We don't want to get out ahead of ourselves. The market's behaving very nicely. Let's let the market recover, and we'll gradually produce and sell into that at ever-increasing uranium prices.
Last question, the healthiness of your balance sheet. You said $80 million CapEx. I think you have that easy in the bank. Yeah,
we have close to $100 million in cash and liquid assets. We obviously paid $80 million cash as part of the $150 million acquisition of Rio Tinto's Rough Rider. So we're very well capitalized. We can certainly cover our capital needs from the balance sheet, which is very nice. So very exciting times. I've said to you before, in my 38 years of doing this, I've never been more optimistic and more excited about the outlook for nuclear energy, the way it's growing, the way it's being accepted, the demand for uranium increasing, and I think will increase at a rate greater than many are even envisioning today.
Fantastic. So we could be optimistic also on the share price.
Absolutely, yeah. UEC's been interesting. This has been a horrible year for equities markets, down 20-30% on the year. and UEC is actually up and positive year to date. So we're a bit of a contrarian play or defensive play, which I think says a lot about what we're doing. The market likes it, and I think we talk about our previous highs of $7 a share. We're trading a little over $4. We're $500 million more invested in doubling, tripling all these capacities and resources. I think we need to be looking at a likely new high well above the previous highs. So good time to be invested in uranium, the company, UEC, and the commodity.
Definitely. Great final sentence. Scott, thank you very much. I'm also very positive on that. And I would say, please go in production next year that we can really do the next move here.
Yeah, nothing would please us more. That's why we're here in business, to produce and sell uranium. So
Fantastic.
I think our long wait is almost over.
Super.
Thank you.
Thank you very much, Scott. Yeah, ladies and gentlemen, that was the Executive Vice President Scott Melbye of Uranium Energy Corporation. I'm also a happy shareholder of the company, and I can also tell you we have done a lot of analysis on the company. Our first price target is $12 for the share. The stock today is approximately $3.90 to $4. So great entry point, and we see it the same way as Scott sees it. That is a fantastic company which has set out the future here within the last 12 months, especially this year with all the acquisitions. $570 million they have invested. They have tripled their resource base, and they will go in production hopefully already next year. And they can ramp it up from 2 to 4 million, then to 6.5 million. That's exactly what we want to see, and also with a, let's say, very competitive costs below the $40 level of per uranium pound, and we see uranium prices moving further. So from that perspective, how can I say that, the mixed cocktail is ready for a nice drink, and so you really should check out Uranium Energy Corporation. Thanks for watching us, and bye bye from Munich, from the Edelmetall Messe.